Lupin was one star, performance in terms of earnings, and the street was expecting there is going to be an upgrade. But does that happen or not? Let's take it across to the Lupin management. Vinita Gupta, the CEO, Nilesh Gupta, MD, as well as Ramesh Swaminathan, the Executive Director and Chief Financial Officer, are joining us on the show to talk to us about just that. Vinita, let me begin by asking you, the US revenue was well within the guided range. How much was Spiriva's contribution into it? And also, was it just the flu season that really helped the growth, or there is some fundamental recovery at play as well?
Yeah, I'll just add to that, given the recent launches, Spiriva in particular, your question around market share ramping up pretty well. We are the last few weeks, our substitution has ramped up to 30% level. So, a very optimistic about the product building both in units as well as revenues in the months and quarters to come. And then added to that, the other product launches, the ophthalmic products. We just launched Prolensa. We have 4 or 5 other ophthalmic product launches over the next 12 months. Injectable product launches starting this quarter. We have 6 injectable product launches. We feel fairly confident of growing our US business into the next fiscal year.
Right. Vinita, just one question. Given the US outlook, would you like to make any changes to the guided dollar revenue run rate of 200 to 215 million?
I'd say it'll be $200 million plus. And on a year-over-year basis, we would expect a single-digit growth based on the fact that while we ramp up Spiriva, we are going to see some pressure on products like Suprep that have additional competition coming in. So, we would like to really get to the double-digit growth level, which hopefully can happen with some of the products that we're litigating right now. There are 2 or 3 products, material ones, that are under patent litigation that will give us upside opportunities into next year.
You were just talking about the new launches planned in the US markets. Tell us more on that, and also which therapies exactly will they cater to? How big revenue opportunities do you see from those new launches?
Yeah, so the material ones are products like Mirabegron and Slind, 2 that we are in active litigation actually in the next couple of weeks. So by March, April, we should be in a better position to be able to determine when we can launch them based on the patent litigation outcomes.
Sure, Nilesh, if I can bring you into the conversation, the India business growth was very strong as well. What has changed here, and does this look sustainable?
I think it was under the works for a while. So, I think we're just coming to our own in India, and we would want to replicate this growth. I think it's a function of the investments that we're making in the market. So I think we've added close to 1,300 representatives, 7 divisions that we've added in the last 6 months, in the last 9 months, 21 new products, doing very well on new product introductions as well. But, I think clearly we're, as a strategy, doubling down on India. And we would expect this kind of growth to continue.
Right. Ramesh, your margin guidance was at 20 to 22%. Would you up that now?
No, as you can very well see, pivoting to complex products has really helped us in the US and the EU and the like. And there's, of course, secular growth across various of the markets. Gross margins are up thanks to the sales mix and the like. And of course, our cost-led initiatives are paying off big time for us. But you would also recognize that there are several moving parts, and whilst there are a lot of reasons to be optimistic given our recent trajectory, we would like to take a conservative view. There are positives, as I said, in terms of the portfolio sticking, in terms of the input cost tailwinds, in terms of the IRF productivity, buoyancy across markets and the like. But there are also, negatives in terms of Red Sea-led possible disruptions, freight costs and the like, and so on. So I think, maintaining the levels around the 19.5, 20.5 percentage points would be pretty good at this stage. We'd like to take it on a quarter-on-quarter basis that way.
Right. Ramesh, the net debt has come down Any plans for to become debt free, or is that the direction you would move into?
As you can see, there's of course accruals to because of the operating profits itself, and we've used that to kind of repay the debts. You would, so but having said that, the position right now and the working capital has been optimized tremendously. What used to be about 103, 105 working days has come down to about 96 levels, and this is a huge come down from what it was even a year ago. This optimization is continuing. And all of this actually translates to more cash for potential usage, which you use obviously to repay the debts itself. It's around 1,000 crores is what our debt level right now is, and we would be virtually debt free by by the end of this quarter or the like. But having said that, it really is a function of, in fact, acquisitions and the like as well. And we are a tremendously acquisitive company. So it really is going to be dependent on that.
Okay, gentlemen and the lady, we let you go on that note. Thanks so much for speaking with us. But the numbers for Zomato are out, and it's a big beat versus the expectation. The profitability has come in at 130.